Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Market Academy. Well, as you well know, last week, actually on Friday, many markets suffered some very significant, very substantial declines. I know that was true in a lot of individual stocks that I look at. Also, too, it hit the broader indices, and of course, it hit crypto as well. My own personal opinion about days like that is I think they're very valuable, actually. I know they can be painful, but I also too think they're a really good teaching lesson because days like that happen. Days like last week on Friday, what we saw to the downside, that big massive crack in the markets, basically propelled by a tweet, as you well know, they happen. Okay, they've happened in the past, they happened last week, and they will continue to happen moving forward. Not just next year or under the current president, but under future presidents as well. This is just the way the markets are. It could be a headline, it could be a CEO saying something, but just these volatile moves that come out of seemingly nowhere to happen. But they're a good reminder. As traders, we always have to be focusing on mitigating and managing risk because most of the time you're going to have calm seas and everything's going to be fine and you're going to be doing great. But you always have this, some refer to it as a black swan event that comes seemingly out of, again, nowhere that can be devastating if you're not properly protected and aggressively managing your risk. Okay, because I know some people that actually were not affected at all by what occurred on Friday because, again, their number one rule, their number one priority is always manage risk. In fact, there's an old saying that if you're a salesman, you're always selling. So always selling, always selling, always selling. Well, if you're a trader, I like the adage, hey, always manage risk, always manage risk, always manage risk. So that way, when situations or events that occurred last week were not actually devastated. Okay, well, the last few weeks we've been looking at a lot of markets, a lot of wave counts, a lot of price charts where everything's been going our way. For example, in Rigetti and Planet Labs, just to name a few off the top of my head. But I do want to think, again, I do think it's valuable to take a look at the situations or the wave counts or the price charts that we were looking at that did not go our way. Okay, and again, this speaks directly to the importance of managing risk. Yes, technical analysis is effective, okay, but are we always right as technicians, or are we always right as traders? No, we're not. So we need to go ahead and prepare for that and trade with that in our mind that, hey, at some point I am going to be wrong, and I just want to make sure that it's not, whenever it does occur, it's not devastating. Okay, now this was Home Depot. Okay, we were looking at Home Depot. This would have been back in September. We were looking for a little bit of an advance up in wave 3 to finish wave 3. We got that, and then we were looking for that pullback. We had some nice structural support in this market. We also had a nice trend line coming into play right here. So essentially, we were looking for a decline, maybe down to that, say, $420, $410, $400 share price handle, and then additional rally up to $450. That was the plan, okay? Also, too, what lesson can we take away from this price chart? Well, the lesson we can take away from this price chart, don't pick bottoms. I'm not a fan of picking bottoms. I'm not a fan of picking tops, okay? So in this case here, I certainly wouldn't be sitting in the market with a buy order at 400, anticipating that without a question, this move up to 450 is going to take place. No, you have to wait until the substructure unfolds. You have to wait until the substructure is complete. And then better yet, you're looking for confirming price action to argue that wave 4 is indeed done and wave 5 or 3 is indeed underway. None of that actually occurred. So what we actually saw was we fell dramatically lower into the, say, mid 370 handle, but also, too, in so doing, we now have an issue with the count. Okay, so that was my red wave 1 extreme at 379.7. So we cannot do this. We cannot drop our 4 down because wave 4 overlaps or ends in the price territory of wave 1. So major no-no. So what we were looking at originally, again, back in September, unfortunately, just simply did not stand the test of time. Okay, we took out too many critical levels. So let's do away with that wave count. So I'm going to take that off the board. So what can occur, what can happen now? Okay, so what's the best wave count for Home Depot? Well, actually, you have two. If you kind of step back from the market, going back to the high here that occurred in December of 2024, clearly a three-wave move down, clearly a three-wave move up, at least an 80% retracement of wave A in wave B. So one interpretation, the most obvious to begin with, would be that it is a flat correction. Now, if it is a flat correction, then we still have several more months to go. We will come down into this low $300 share price area, most likely into the first quarter of 2026, bottom out, and then we can see or look for an advance. Now, another scenario which is equally likely or equally plausible, because you do have the initial three-wave decline followed by a three-wave advance, is that we actually see Home Depot stabilize. And I probably, if I had to pick between the two counts, Home Depot with the flat correction or Home Depot with the contracting triangle, I would probably go with the triangle. So under this situation, we most likely just simply trade sideways. If it is a truncated triangle where wave C, D, and E are very small in comparison to the rest of the structure, then I would be looking for this to terminate in, say, Q1 of 2026. If it is a normal kind of a triangle where we see, fairly good proportion between each of the subwaves of the pattern, then I would probably say June, July, late second quarter, early Q3 2026, again, June, July, that's where I'd be looking for the culmination of the triangle. And then ideally at that point, we can look for the larger uptrend to resume. Okay, so now let's move on and take a look at another price chart, another wave count that did not work out. Okay, so in this instance here, this was Upstart Holdings. We had wave 1 up, A, B, C down for 2, and then 1, 2. We were starting to move above that upper boundary line of the base channel here, of the base channel. So that was like, okay, hey, this is solid, this is good. We're good in wave 3, all the way up to 121.2. So it looked nice. Okay, and then we started seeing some weakness in August. Okay. That was okay. Maybe we're actually working a 1, 2, 1, 2, but then we started to fall below that lower boundary line of the base channel, which is not good. Okay, so really when we traded into September, that's when we really kind of saw that there's kind of a problem with this wave count. We could go 1, 2, 3, maybe a 4, but we simply did not hold that 60 area. So again, what we were looking for back in July simply did not come to pass. This happens, okay? Yes, I can show you probably more examples of our wave counts, our technicals, our candlestick patterns, our momentum patterns working out, but they don't always work out, okay? I've been in the business for pushing 35 years now, and I've yet to encounter that for any technical tool, any trading technique, any computer, any algorithm, any AI that is 100% correct all the time. Now, what I have found are tools that have a very high degree of reliability, say 70, 80%. Okay, that works. And again, we've gone back probably over the last 3 weeks, taking a look at several examples of price charts of analysis that we've done earlier in the year, sometimes just the prior week before, sometimes several months in advance. And we've seen how those scenarios did indeed unfold exactly as expected. Okay, but again, that's not always going to happen. So you need to prepare for that. So when things do go wrong, you're not blown up or you're not blowing up a trading account. Okay, so whenever I kind of update what's going on here in Upstart, the one thing that I kind of initially want to do is, this is of course the KTL technique. We put in a top here back in August of 2023. And then we have a fairly lengthy decline, pretty much into say August 2024 at the latest. But we do spend some time coming down. Okay, so if we go ahead and just go ahead and draw those initial KTL trend line and then the secondary trend line, we kind of have a window here, and the window begins in November and really lasts until, say, February. This might be a good window to be looking for, say, the current pullback, the current decline to terminate. So what I'm kind of thinking in Upstart is that, ideally, again, 1 2 1 2. This is a very positive picture. Would argue that, again, as we move into, say, November to February, November 2025, February 2026, we come down probably below 40, not under 30, and then I'll be looking for a reversal in price. So I'm just going to put this issue on a watch list and just continue to keep an eye on it, see if anything gets exciting moving forward. But I really want to focus more on this, the latter part of 2025 and the early part of 2026.